hours into trading. It is Monday, January 24th. Hello, traders. Big market sell-off. I'm going to try and keep this fairly quick. Got a lot of stuff going on. I am not trying to get short here. I believe that we have a support level that's going to be established. I believe we're going to hit it probably today. I'm going to show you the pattern that I'm looking for. Right now, we've got the market selling off in this downward sloping channel right here. That channel is typically resolved when we have the market forming long red candles that are closing on the low and through the lower end of that channel. So let me put up a chart that I put in my chat room earlier. This is what I'm talking about. And you can see how we've got this channel that's defined right here. I extended it. And what we're looking for is that breakdown below the lower end of the channel. And we need to have these long red candles. We must have these long red candles. Once we get these long red candles, there will be a red candle and it's going to feel like the market is never going to rally again, ever. And all of a sudden, this long red candle extending down like this in the last minute, boink, all of a sudden it closes and now it's a bullish hammer. So it's gone from looking like this to looking like this with a big tail underneath. Then the next candle. And this is the key. You must have this exact pattern. Not something that kind of looks like it, not something that's pretty close. You need this exact pattern. Long green candle stacked, long green candle, long green candle, long green candle through the downward sloping trend line, the upper edge of it. And I mean, these candles have to be relentless. Very, very little overlap. No pausing, no dojis until we get a big monster rally. Then we can expect to see some continuation like this. And then we start attacking the high of the day. We may or may not get into the gap today. Let's go back to the regular chart because now I want to show you what I'm looking at. So there's the high of the day. I can take and drop an alert line on it just so that it's up for your view. I don't know that we're going to get below or above that alert line today, but anything close is going to give us that bullish hammer that we're looking for. So we want that big blow off low down in here, that selling climax, that oh my God moment. And then we want it to feel like this is the only chance you're going to have to buy stocks this cheaply ever again. Get those stacked, big, long green candles. And that is what is going to form a capitulation low. That is how we know that we can stick our head in the news and take a chance with a very high probability of success. Look at this drop right in here. What happened? How could this possibly happen? The market looked so good. My gosh, look at that weekly chart. It is beautiful. How does this all of a sudden turn into this watershed moment? You can see major uptrend lines have been breached. Even last week, they were breached. Major moving averages breached. Well, there are a few different reasons for this. One is option implied volatilities have been super, super low. Part of the reason for that is that we have a Fed put in place. Fed put? What the heck? Fed put? What does that mean? That means that there's very little market risk when the Fed is artificially suppressing interest rates. So interest rates are way, way, way too low. Well, that could be changing. In fact, now we could be looking at an interest rate hike as early as March. There's a 95% chance that we're going to see a Fed rate hike in March. That is what the market has priced in. That's not what Pete thinks. That is what the market has priced in. Worst case scenarios are getting priced in right now. And that's when you get these big panic moments. So earlier today, I dropped a Fibonacci line and I showed how far the market could fall. It came almost perfectly in line with this 429 level on the S&P 500 or the SPY. So SPY 429 has been breached. What's the next level of support? Well, you can look for measured moves, and the way that you do that is you take this high right here and you take this short-term low or this low, very close to each other, and basically the S&P 500 had rallied from 450 to 480. That's a $30 move in the SPY. If you subtract $30 from 450, you get 420. I believe 420 is where we are going to find support. And I believe that it's going to culminate with those long red candles breaking through the low end of that trading channel that I just showed you. If we get that type of formation, that is the capitulation low we're looking for. Anything in between now and then is just noise. It's not the move we're looking for. Tiny, tiny little candles. And then a bullish engulfing candle. Is this it, Pete? Is this the one? No, that's not the one. That's not what I just showed you. This is just a little bounce. And when you get this engulfing candle here, is this the one, Pete? Is that the one? No, that's not the one. Do you see long stacked red candles here? No. This is just a tiny reprieve, and what this is a short covering bounce. So everybody gets super excited. Here we go. New low of the day. Oh, short, short, short. Uh-oh. Bullish engulfing candle. Here we go. I better exit. Oh, dang it. I lost money again. That's because these are weak hands that are shorting here. That is just a short cover, and we know that because look, it's instantly erased. So don't short those lows. Don't short into long red candles. Wait for these bounces. Then you'll get your opportunity, especially when you see that is engulfed and now you're giving up half of that green candle. Okay, that's a good entry point for a short. Where do you exit on this? You exit on these long red candles if you're short. So if you had shorted up here, compression, okay, here we go. Now we're breaking down. You're short here, you're covering here. Wait. Okay, reload. Waiting for that red candle, then you'll be covering down in here. I think we're getting really close to it, folks. We're getting down to that lower end of the downward sloping channel, and I think we're going to see those long red candles. This is before 3 hours into trading on Monday, January 24th. You heard it here first. So what do? We get our orders ready. We have all of our stocks. I'm just going to go through arbitrarily and show you what you need to be doing. You don't wait for that low. You're in here right now, pounding away, setting alerts, trying to get the stocks on your radar so that when they bounce, you get these alerts popping up. And you can set horizontal alert lines, you can set vertical alert lines, whichever type fits that stock, but you would click alert, you would double click here. Now you'd have a horizontal alert line so that when the market comes in and it rallies above, you're getting alert after alert after alert on stocks that you'd like to own. That's how you need to be playing it right now. If you're playing it on the short side, you need to be super nimble. And you need to know that you're coming in very late to the game. So what do I expect to happen over the course of the next couple days? Well, I've told you that bad news is priced in right now, and I feel that the actual FOMC statement is going to be as dovish as the Fed can possibly make it. They know, they see what's going on in the marketplace. They want to calm people down. So they'll probably say something like, well, things are kind of looking like maybe March will be the date when we have to raise rates. But then, the next day may be a little bit further off. Whatever they do to soften the tone, buyers are going to come in, they're going to embrace the market, we're going to get that nice relief rally, and then we're going to see how earnings shape up. You've got mega cap tech companies announcing earnings in the next week or so. I believe those earnings for those really big tech companies are going to be good. I think Amazon, Apple, Microsoft, Google, I think they're going to be good. They're not hit with the supply disruptions that other companies are hit with. They're also not hit with these huge inflated input costs because a lot of what they do is technology and social media. So those earnings should be quite good. Valuations are high, valuations are stretched, sure, but I think overall the reactions will be generally positive. And I think a lot of buyers are going to look at those stocks and see this as a buying opportunity. That doesn't mean that we're off to the races and we're going to make a new high in the next few weeks. Nah, I'm not looking for that either. I'm looking for a reprieve. I'm looking for the market to bounce. I think we've got a chance to get back up to the 200-day moving average. Realize we haven't even tested the 200-day moving average in I don't know how long. Let's zoom out. Oh, very long time. In fact, even that March low from the year 2020 on the coronavirus scare, that is the type of bottom that we're looking for. And there's a good example of the pattern that we want to see. There you get your big watershed event. Let me go back to a normal view so we can zoom in on it. Let's go all the way back to it and see what it looks like. That's exactly what we're looking for right here. So during the course of the day, oh my God. But look what happens by the end of the day. Actually, this is by the end of the week. I don't have a daily chart on it, but it's going to be the same thing. You're going to have a long red candle that was forming here that turns into that bullish hammer, and then you get follow through, follow through. So on a weekly chart, yeah, sure, this works, but you would see it even better on a daily chart, and then it never looks back. Now, I'm not looking for us to get to a new high. Okay, I'm not looking for that because I believe we are going into a higher interest rate environment. But could we get back to that 200-day moving average and spend some time there? Yes, for sure. So look for that price pattern today. I'm going to keep this short. Set up your favorite stocks. And that is an alert for us to get short. That is our bearish moo alert. So I'm going to click this off. And I'm going to tell you that the types of trades that I'm currently evaluating, I believe that support at 420 is going to hold because of the reasons that I showed you. That is what is called a measured move off of the high. So as a support level I'm looking for, first and foremost, I want to see that capitulation low. I want to see those long red candles. I want to see that bullish hammer. Then I want to see the resulting green candles. During that process, though, I'm going to be looking to sell a bullish put spread on the SPY. I'm really looking at the 420, 418 bullish put spread in February 4th. That gives me a couple of weeks for that bounce to materialize. And I'm going to be also buying that same February 4th bullish call spread. Selling a bullish put spread, going to use the proceeds from that to buy a call spread. The point is that you have to be short option premium because option implied volatilities are sky high, and we want that working in our favor. So the call spread that I'm looking to buy is going to be a 436, 441. Buy the 436 call, sell the 441 calls. That is a $5 difference between the strike prices. And I believe that the SPY could get back to the 200-day moving average in a couple of weeks once we get that big relief bounce. Asset managers are sitting on their hands. Their wallets are in their pockets right now. They are looking for exactly the pattern that I've described to you. When they see it, they are going to come in and aggressively support stocks and place money. Until then, everything else is just a little bounce and nothing more. And until you see that washout, until you see that capitulation low, you do not start buying. And it'll be very, very obvious to you. If you're a swing trader and you can't watch the market during the course of the day, then you're simply looking for that bullish hammer like that, right in there. You're looking for that big sell-off, that big down day, that runs higher, and then finishes like that because that is what you get on the backside. That's how you should be trading the market right now. If you're super nimble, there's still some shorting opportunities, but the hour is late and these snapback rallies have been violent. You will be scrambling to take profits on your short positions. You will see those stocks moving higher. You'll be out there trying to reach for asks that are never there because the technology will be relatively slow. So you'll be raising, using market orders, doing anything you can to scramble and cover your short positions instead of calmly sitting back, waiting for that capitulation, bam, 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 focusing on the long side. That is why I am not trading the short side right now. I know what's setting up. I know what's coming. I don't want to be distracted with my short positions. I only want to be focused on the long side. Why am I so confident that this bounce is going to happen? Well, interest rates are still near historic lows. Might they be ticking higher? Yes, they could be ticking higher. But it's not the end of the world right now. And we've seen VIX at extremely low levels. That's the VIX or VXX, either one. You can look at just as an example of how low option implied volatilities have been. That tells me you can see how minuscule they've been. Yeah, look at it now. Now it's climbing. Now all of a sudden we're getting this spike in option implied volatilities with this type of market drop. Well, back in here, asset managers were unprotected. They didn't see any threat, they didn't see any danger. The biggest market sell-offs come when nobody is expecting it, when nobody is hedged. Well, now they're sure are getting hedged. So that's one reason that we've fallen. TLT, you could take a look at what bonds have done. TLT broke through that 141 level. Pete, why are bonds rallying right now? Well, this is in part a flight to safety after a big market drop like that. So that's one of the reasons that bonds are rallying right now. When the dust settles and the Fed starts to hike rates, you will see it come back down. But it did break that 141 level. So that's another condition that's weighing on the market currently. Watch for that low. I think we're getting close. When we do, it's going to be time to come in and start considering some long positions. That's all I've got for you today. Good luck with your trading. Be super, super patient. Wait for those long red candles. It's going to be a really good buying opportunity if you're patient. So don't jump the gun. Wait for that setup. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.